Kitco Mining special coverage of Xplor is brought to you by Radisson Mining.
You're watching Kitco Mining's exclusive coverage from Xplor 2025 in Montreal. Joining us now is Kiran Patankar, President and CEO of Maple Gold Mines. Kiran, welcome back.
Thank you, Ernest. Great to be here.
So what a difference a year makes. Last year I would say the tone here was cautious optimism, confidence. This year it's a bit of an I told you so. We have a lot of people feeling very good about how this year has treated the mining industry as a whole, and the juniors definitely. So I know you've got lots to share with us from Gentile, but I wanted to get a sense from you first of where you think we are in the gold cycle. So obviously we saw one of the largest one-day drops in the gold price in many years last week. We're trading around both sides of 4,000. Where do you think we are in the gold bull market?
Yeah, it's an interesting question because certainly you see a lot of excitement around gold. I think the macro setup for gold continues to be quite constructive. The correction that we saw last week, I think, is probably healthy, given the fact that we saw such a steep run-up. I think the market probably, again, I'm not a macroeconomic sort of prognosticator. We focus on running a good fundamental business at Maple Gold. But I think most of the shareholders that we've talked to continue to be constructive on where the gold price is going. We just secured a large investment from a U.S., one of the world's largest precious metals funds. We closed that financing last week. Obviously, funds like that don't invest in companies like us unless they believe there's further potential for the gold price to appreciate and for good companies like Maple to continue to execute. I think what it does, and it should bring people and investors back to, is focus on quality. Because I think the gold price rising is a rising tide that has lifted all boats. And I think the focus as the majors, our partner we're partnered with Agnico Eagle, for example. They've continued to perform because they've focused on quality ounces and margin expansion in this rising gold price environment. So I think the discerning investors out there that are certainly cautiously optimistic about where the gold price can go are really starting to take a very careful quality filter to the kinds of companies at all stages of mining, whether it's a producing company, development company, an exploration company. Capital always flows to the best quality companies in each part of the space. I think there's a lot of room left, but I think discerning investors are starting to filter out which ones of those are real and which ones of those aren't.
So when we spoke to you last year, you made a very strong case for why it was a very good time to be investing in the juniors. Obviously this year we've seen valuations explode among the majors. We've seen a lot of activity in the juniors as well. So where do you think we are in the mining investment cycle right now?
Well, one of the things that never changes is these markets are cyclical. And when you start to see, generalist investors coming into the gold sector after years of kind of ignoring it, it's because they see that at, $4,000 gold price and $6,000 Canadian gold price, which was unheard of years ago, the companies that have bases of operations and, significant ounces that they're producing year over year at reasonable costs are, padding their balance sheets. Their free cash flow margins are off the charts. And so the generalist money has been flowing into those cash flowing companies. And those companies over the last couple of years have really focused on being disciplined with how they spend their capital, right? They've focused on these long life, high margin, low cost type producing assets and returning a lot of capital to investors. So the market's focus has been on that, dividend policy, progressive dividend policy. How much cash can the producing companies return to shareholders, which I think is going to continue to be a focus. It keeps a discipline. But there hasn't really been that focus or emphasis on growth, right? Because every ounce that comes out of the ground has to be replaced in order to maintain those dividends and that progressive dividend policy, which is why I think, the specialist mining funds that would have been investing in the seniors, as of a couple of years ago, that have seen their investment return manifold, are happy to sell at these elevated prices to the generalists who are starting to look for an entry point into the gold sector and want less risk. And there's a rotation down into the, as I said, the quality exploration and development companies, which are the next leg of growth for these majors. We have not yet seen that real robust M&A cycle that we typically see when gold prices are this elevated. I was an investment banker for 8 years before I got back onto the operating side of the business. And in the last time the gold prices ran up the way it did, we saw a lot of companies going out and buying because there's always the paradox of, gold price is up, valuations are up, but there's a point at which it becomes cheaper for major companies, to buy ounces than it does for them to go out and find those ounces themselves, right? So I think for the specialist funds that have started to rotate into juniors, explorers and developers, they've seen that value, but I think it's still something that the general market has not quite picked up on yet. And I think once the market focuses back to where the growth is going to come from the majors, I think you should see real equity margin expansion potential amongst the juniors, right? And that's ideally where we're positioned, is to really benefit from that point in the cycle.
All right. Well, let's talk a little bit about Maple Gold. So you recently raised $13 million in brokered financing. This was upsized from 10, so that's encouraging. And this came on the back of a $5 million private placement. So how has the financing environment been treating Maple Gold Mines this year?
I'd say it's robust. I mean, we were a 20 million or 25 million market cap company when I took over in 2023. We've raised almost $18 million over the last 6 to 8 weeks with very strong shareholders, right? We actually could have raised more. We turned away a lot of money. We're trying to look for that real supportive shareholder, long-term focused shareholder base. The $5 million private placement was really positioning for Michael Gentile to come in. It came in as a 9.9 partially diluted shareholder and is also strategic advisor to the company. Everybody's familiar with Michael's success and his philosophy, his investment philosophy amongst the juniors. It's aligned with what we were talking about where we are in the cycle and how to really make money as we enter into a new world of the gold price. So with Michael's support, Agnico's support on that financing, we raised $5 million at 60 cents. We also rolled the share structure back 10 to 1. So we've got a tight share count, and we cleaned up our board, right? We added some very strong people to the mix. Mark Legault, who was a 34-year veteran of Agnico Eagle, and Chris Adams, who I worked with for years on the finance side as a project finance, maven, knows what he's doing on the project finance side in the Americas. We then were approached after Beaver Creek. We were approached by a large fund, mining specialist fund, but a large mutual fund out of the U.S. that I've been talking to for the better part of a year. We saw them put a $7 million lead order together. We turned that into a $10 million offering. It had so much demand. It was done at $1.20. So we started in the first financing. It was a 60-cent raise with a warrant. The last round we just completed was $1.20, so a double. And it was done without a warrant, right, on very attractive terms with the right shareholders in the mix. It was upsized to $13 million. As I said, we could have taken more, but this is the right size of financing for us because it funds, importantly, the entire next year worth of work for Maple and probably more than 2 years worth of G&A with our reduced G&A budget of just over $2 million a year. So I would say the financing market has been excellent for Maple, but we've also worked for it, right? We've set up the conditions for success. We've attracted the right investors into the mix. We haven't just taken money for the sake of taking money. We've taken the right money, strategic money, so that we're well positioned to deliver fully funded growth catalysts over the next year plus.
All right, well, let's talk a little bit about where that money's been going and the results. So over the summer, you published the latest results from the winter 2025 drilling program. So what's the latest on the mineral resource?
Yeah, so we started the discussion with SLR, who did the 2022 resource when we were a joint venture partnership with Agnico Eagle. That resource was done using an $1,800 gold price. So there's 3 million ounces just over using 1,800 and an elevated cutoff grade of 0.45 grams per ton. We've done a lot more work in terms of our understanding of the geologic system, better domaining of what's controlling mineralization. We were able to demonstrate good step-out drilling success. So again, we're always doing our diligence. We see a path to growing our deposits substantially from where it is, right? It's 3 million ounces today, but it's only 6 kilometers of a 55-kilometer strike length on the Casa Berardi, which we control. The remaining 50 kilometers has really no drilling on it. And then our deposit itself has kind of a hard floor because it really doesn't have any data below 400 or 500 meters. So we approached SLR with the view that we wanted to look at a resource update coming into late this year, early next year. We're on track for that, but we're also using that resource estimate to sort of help guide our drilling so that when we had this step-out drilling success, we know we're adding ounces, but are those ounces open pit? Are they underground? How do we optimize? Right, those are the things that we're doing right now. I should see preliminary numbers back from SLR this week at the conference. They're actually here. But in terms of, we've guided the market that we're going to be in a position to deliver that resource update in the first half of next year. And we're obviously in the midst of planning and getting ready to start drills turning on a 30,000 meter program this winter. So I think we would expect, and certainly our hope and our goal is, to try to grow this 3 million ounce deposit to something that approaches 5. It puts us in even rarer territory of a multi-million ounce deposit with infrastructure in Canada in an elevated gold price environment. There's only a handful of those companies. We're one of probably 7. So the more ounces that we have, certainly we look a lot better on paper, but we're also not trying to just grow ounces for the sake of a number of ounces, right? It's about a quality of ounces, about not sacrificing grade or, high margin ounces just for the sake of coming up with a number, right? I expect we'll be in a position to deliver that resource update as we've guided to early next year.
Okay. And then aside from that resource update, obviously you're going to have your drilling program as well over the winter. What are some maybe key milestones or other announcements we can look forward to from you guys in the coming months?
Yeah, it's going to be a busy winter for us. The winter is the time where we really drill. It's most of our drilling gets done during that seasonal. The ground needs to be frozen to access certain portions of the deposit. So we start drills turning in the next 2 weeks. Expect to see a steady stream of news flow on assays starting probably late in this year all the way through June. The resource update, as we already mentioned, is going to come out early next year. We've got a internal resource sort of scoping study, engineering study that's actually already underway with Ausenco that will allow us to start internally understanding and answering some of the questions around what does an open pit look like? What does a starter pit look like? What is the sort of optimization between open pit and underground, different process flow sheets, utilizing potentially some of the mill capacity that's in the region, right? So, and we've had Ausenco actually do a gap analysis on all the data. We have 260,000 meters of drill core. We've got all this metallurgical data. We've asked them, what would it take for us to go, if we assume a positive scoping study, what would be the timeline for us to get to a PEA, right? And we look at from the time we hit go on a PEA to the time we actually deliver it, it's probably a 6-month period. So assuming everything goes well, the drilling continues, the scoping study looks good, we could be in a position to deliver a PEA by mid next year. We haven't made that decision yet, but again, it's part of the beauty of having the capital, $20 million in the bank and fully funded growth catalysts in front of us is now, instead of just looking drill hole to drill hole, we can start to strategically plan. This is a rare asset, right? This is something where we already have the 3 million ounces sitting at surface right next to a highway with grid power. So you could certainly go down the path of development on those ounces, but what we think the real value add is to continue to grow and expand because we know that there's a lot more ounces here to find. And so you're going to see Maple continue to focus on focused exploration and disciplined development on a dual track path. And there's a lot of catalysts and a lot of questions that are going to be answered over the next 12 months.
All right. Well, it sounds like an exciting time for the industry and an exciting time for Maple Gold.
Indeed.
We'll have to keep in touch with you and check back as we hit some of these milestones.
Yeah, it was fun to see the difference in the company and the market between last year to this year. So I'm looking forward to seeing what next year brings.
Plenty more to come from Xplor 2025 here in Montreal. I'm Ernest Hoffman for Kitco Mining. Make sure you're subscribed to our YouTube channel so you don't miss our updates.
Kitco Mining special coverage of Xplor is brought to you by Radisson Mining.